Welcome back to the Fund Financing Podcast. During this episode 2, we will focus on the different financing solutions offered under Luxembourg law. My name is Delphine Gomes and I'm a counsel at BSP. I'm here today with Bramao, partner at Elvinger Prussen, and Tiago Ventura Mendes, senior managing associate at Linklaters. When talking about fund financing, professionals are in fact referring to a financing granted to an investment fund. There are 4 types of fund financing: subscription lines, NAV facility, GP lines, and hybrid facilities that we will all see in more details during this episode. Let's kick off. Anna, would you mind explaining what a subscription line is, please?
Sure, Delphine, thank you. Subscription line facilities, in the jargon sublines, which are also known as bridge financings and capital call facilities, are facilities borrowed by a fund to a bank or a debt fund to bridge the time gap between making investments and receiving capital contributions from investors. It is a cash management tool for fund managers. Such facilities are generally secured by having the fund grant a pledge over the claim it holds against the investors of the fund under their commitment to pay. Indeed, an investor pays its investment when called by the fund, generally not in one shot, and as a result, the fund will hold the claims against the investors under the uncalled capital commitments, and by having a pledge over the bank account of the fund where the commitments are paid. The borrowing base for a given subline is determined on the basis of the creditworthiness of the fund's investors, and the due diligence from the lenders will be carried out on the documentation of the fund, and especially on the subscription documentation, in order to force them to be aligned with the investors in the fund.
Thanks a lot, Anna. That was very helpful to start digging into the topic and better understand what a subscription line is. Now, let's move to the new trend consisting of NAV facilities. Tiago, could you please provide us with insights on this new type of fund financing?
Thanks, Delphine. So NAV, net asset value facilities are provided either to the fund directly or to an SPV owned by the fund, secured by the underlying investments and any cash flows and other distributions that the fund will receive from those investments. If lending is to an SPV owned by the fund, lenders may require a guarantee to be provided by the fund itself. Also, generally, NAV facilities command a higher pricing than the capital call facilities, giving the relatively weaker security package that they benefit from. In recent years, there has been a significant growth in the number of NAV, or asset-backed facilities, being provided, and an increase in the number of lenders active in this market.
Thanks, Tiago. Interesting to see how fund financing has evolved within the past few years in order to provide additional flexibility to the funds. Anna, you also wanted to tell us a few words about GP lines, which are not the most used or known types of fund financing, but could still be helpful for the audience.
Yes, so as a general consideration, the terms GP lines or GP financing can be misleading because they can cover different types of financing. GP lines are used to bridge the payment of the management fee owed to the fund manager by the investors in the fund. This type of financing usually takes the form of a revolving loan, and the security package is composed of a pledge over the receivable held by the GP against the LPs in respect of the management fee, if the fund documentation allows for such a pledge, and a pledge over the bank account over which the management fee must be paid. GPs can also be involved in another type of financing due to the fact that as funds have grown in size and investors had made larger commitments to the fund, LPs expect the GPs to have more skin in the game. The financing would here be used to bridge the capital contributions to be made by the GP as an investor in the fund, not in its capacity as managing entity of the fund. Sometimes, lenders would like to have a pledge over the interest held by the GP in the fund as security, but oftentimes the LPEA does not provide for such an option. The workaround here is to have the GP invest in the fund via an LP interest, which would then be pledged instead. This type of financing is similar to another type of financing, which is called employee co-investment partner loan programs, whereby a fund sponsor may offer certain key employees and investment professionals the opportunity to invest alongside its funds. To render the investment by these parties more attractive, the fund sponsor may require a third-party lender to advance the funds necessary to make the investment directly to the relevant investors. The security package usually consists in pledging the LP interests in the fund.
Thanks, Anna. That's great to see that actors of the investment funds industry benefit from various options for financing their investment and activities. It looks like we can also combine two different types of fund financing within one and the same financing. Tiago, could you please let us know more about hybrid facilities?
Thanks, Delphine. So the particularity of hybrid facilities is that lenders have recourse to both the underlying assets and the undrawn commitments of the fund. This is a less established product though, and the lenders will typically require covenants that ensure there is a sufficient headroom of undrawn investment commitments, as they do under a capital call facility, as well as ensuring that the NAV of the fund remains above a minimum level. These facilities provide funds with a long-term financing from the fund's first close when they are undrawn investment commitments until the fund is in its divestment period, when all commitments have been fully drawn and the fund is fully invested.
Thanks so much, Anna and Tiago. It was very insightful. I think we now have a better view on the different types of fund financing offered on the Luxembourg market, and we are looking forward to the next episode to dive into the current trends and outlook for the coming year.